Hey, do you want a part-time job? Just working 4 to 8 hours per month for 30 years that pays you at least $1,195,000 over a 30-year period? Can I tell you how your home mortgage really works? My goal for the homeowners I work with is to pay off 100% of their debt, including your house, in 12 to 17 years, saving a minimum of $100,000 or more in payments and interest, getting all the interest you paid to the bank back in your pocket at the end of 30 years, using the same payment every other agent would have you spend. Here's what every lender and agent can help you do. Buy a house, get a loan, pay it off in 30 to 40 years. Would you like a different option? Let's assume that you have a car loan of $32,500, two credit card bills, one being $7,500 at 14%, and another $2,500 with 15% interest. You purchase and finance a $500,000 house at a 7% interest rate. Your monthly payment is $2,993.86, plus $864.58 for taxes, insurance, and private mortgage insurance. You want to be debt-free in 12 years. You will eliminate 216 monthly payments, saving you $292,508 in interest payments. Now you can take those monthly payments and invest those in an instrument for the remaining 18 years at 3%. That will accumulate to $501,608 towards your retirement. But you say, I'm not sure I can pay off my mortgage in 12 years. How about over the next 17 years? You still eliminate 156 payments, saving you $171,795. Invest those monthly payments over the next 13 years at 3%, and you accumulate $431,818 towards your retirement, and you also have a paid-off house worth how much with inflation? You have four options when you work with me. Option one, buy a house, get a loan, pay it off in 30 years. Option two, buy a home, pay it off in 7 years, save $672,842 in interest paid to your bank. Option three, buy a house, pay it off in 30 years, collect rent. Option four, buy a home, pay it off in 12 years. Create a tax-free retirement with the money you would have paid to the bank. All with the same amount of money every other agent and lender would have you spend each month. Let's get a handle on your largest debt, your house mortgage. In this example, we had someone that wanted to borrow $195,000 loan amount at 4% for 30 years with a payment of $930.96 in principal and interest. What if you could have negotiated the loan for 3.5%? Your payment would be $898.09. That would save you $16,832.99 in total interest. You saved $32.87 in payment, but suppose you paid the $930.96 each month on that 3.5% loan. This option would have saved you $19,550, and you would have paid off your loan in 339 months instead of 360, saving you 21 months of mortgage payments. Yeah, but interest rates are at an all-time high. Let's go back to 1972 and look at the historical interest rates. The graph shows that the average interest rates are 7 to 8%, with a high in 1980 of 17%. The last time we had a 3% interest rate, besides a few years ago, was over 270 years prior. Yeah, but I want to wait until house prices go down. Let's say that the house you're wanting is $500,000 and the interest rate was at 6% at the time for 30 years. Your monthly payments would be $2,997 with total interest paid to the bank of $579,190. Let's say the house drops to $475,000, but interest went to 7%. Monthly payments, $3,160, and a total interest to the bank, $662,000 $667. I still don't like the house price, so wait until it drops to $450,000. But the interest rates went up to 8%. Your payment would be $3,301, and the total interest you paid to the bank would be $738,698. You thought you were saving $50,000, but ended up paying your bank $159,507 more in interest. Do you think hiring the right agent makes a huge difference to your retirement? Here's the average home buyer's plan. Find an agent. Any will do. Shop for a 30-year loan with good rates and cost. Buy a home. Refinance every 5.1 years, which is the national average. Sell every 8.7 years, which is the national average. Retire with a mortgage. Baby boomers have a median total household retirement savings of $35,000. Trade your mortgage for a reverse mortgage. Sadly, for most buyers, this is the plan. I try to help my clients act like bankers, not borrowers. 1, reduce your cost of borrowing. 2, have a money plan. 3, increase your rate of returns on your investments. Those who understand interest earn it. Those who don't are destined to pay it. How do banks make money? They pay you a small percentage for your savings account, but they charge you 15 to 25% for your charge card borrowing. Banks borrow low and invest high. Here's a chart on the total cost of buying and financing your house. Where are you on the chart? The last column shows the total cost. Stop focusing on interest rates and pay attention to interest dollars paid to your lender. Have you refinanced your house lately? This example shows you that for a $100,000 loan that had an interest of 4% and that person refinanced for a lower 3% loan, that they saved $55.82 a month. The refi cost them $3,000. How long before you really save some money? 53.74 months later. Did they start all over again with a new 30-year loan? In this case, they did not. They refinanced for another 30 years. The $28,489 that they paid in for the last 5 years went to the bank, and they started all over again, paying down on their house. Has your agent, lender, CPA, or financial planner showed you this kind of information? How do I help you accomplish all this? Do you want to know? Let's say you're buying a $460,000 house versus renting right now. Check out the graph. Your monthly payments stay about the same for the mortgage payment. What's happening to the rent rates over the next 10 years? By buying a house, you will have appreciation gains, amortization gains, tax benefits. In this case, you would be $285,846 better off. So what is my 5-step cash flow and debt elimination plan? Step 1, we do a cash flow and debt analysis. Step 2, we do a cash flow repositioning. Then there's the myth that a big tax refund is a good thing. Find ways to save and use the savings to pay off your house early. Credit card cash flow strategy. You want to pay off those credit card bills when they're due, the whole bill. Step 4, prepare a customized My Equity Blueprint plan. Step 5, an annual debt and cash flow review. Is it time we start getting your home paid off? Will paying an extra $410 a month make a big difference in what I pay the bank in total interest? but I don't have an extra $410 a month. Let's see what we can find without changing your lifestyle. The mortgage calculator shows that $400,000 house that appreciates 3% a year over 30 years would be worth $970,904. 3% is the average appreciation per year, but in the last couple of years, we had much more than that. How did you come up with the $970,904? After 10 years, we add the value of your home, the equity, tax savings, and down payment. You made 27.83% cash on cash return, even with a 6.99% interest rate. Does it make sense for us to work together? Let's get started in getting you moved to your dream home and making money instead of your bank. Call or text me at 909-213-2110. Pixley Lewis, eXp Realty, California, license 00543366. Bye for now.